In this episode of the Seatrade Maritime Podcast, we'll be talking to Adam Kent from Maritime Strategies International about the macro outlook for the shipping markets in the second half of 2025. Welcome back to the podcast, Adam.
Thank you, Marcus. Thank you for having us back.
So if you could just set the scene for our listeners of what's been happening over the last 6 months and where we're headed, I guess.
Yes, of course. Well, I mean, it's been yet another busy 6 months from a shipping market perspective. And I think there's even more moving parts now that we're having to grapple with. And these have come on top of the ones that we had at the start of the year. I think from an economy perspective, given the various sort of side, tail and headwinds, the global economy has actually faced relatively well. I think in terms of things have been stable. The US economy has remained somewhat resilient with modest GDP growth and relatively robust consumer demand. Europe has continued to grapple with sluggish growth in industrial contraction, and China's still sort of struggling with its property sector, which we've now seen for a number of years. And I think we've got to sort of thank the emerging markets, the like of India and Southeast Asia, sort of really sort of propping up the sort of global GDP level. We have become a little bit more negative towards the second half of the year, and we expect sort of world GDP growth to come in at around 2.5% this year, and potentially a little bit higher next year. But we're sort of sat in sort of a stable, low but positive growth area. Now, although that GDP appears stable at an aggregated level, there's certainly a lot going on elsewhere beneath the surface, which has been impacting the shipping markets over the course of the last 6 months. You mentioned tariffs. They have been a decisive factor since the start of the year from a number of standpoints, I would suggest. I think the uncertainty, the variability, the chaotic timings that we've seen have certainly played a part in shaping trade already over the course of the year. Shippers have either been looking to beat tariffs by front-loading, or certainly when tariffs crept up to over 140% of where they started the year off at, I think, many were looking at avoiding just calling in at China altogether. And I guess currently we're in something of a limbo territory with a lot of the tariffs put on pause till next month, which will certainly give the US administration a little bit more time to try and have an agreement with their trading partners. But I think as we've come to know and expect now from a tariffs perspective, nothing's certain. So we're not entirely sure whether that date will be cast in stone or whether things will get pushed out yet further. I think from our perspective, from a tariff standpoint, we're likely to see at least a 10% uplift on tariffs more broadly from US trading partners, and a lot more from Chinese exports into the US, sort of in the 30 to 40% above where we started the year off. So that has and will continue to have a decisive impact on trade in some shape or form. Tensions in the Middle East continue to shape the markets. I think a couple of weeks ago, we started to hear of more owners thinking about sending their ships back through the Red Sea, though events over the course of this last sort of 5 or 6 days with the Houthis once more attacking commercial shipping will have sort of no doubt put a stop to any considerations of sending vessels back through the Red Sea if those vessels were currently diverting around the Cape. And of course, in addition, over the course of the last 6 months, we've had the escalation in the conflict between Israel and Iran increase. That sort of heightened concern for shipping in and around the Strait of Hormuz, and with sort of rumours of closing off the Strait of Hormuz, sort of pushing up certainly the oil price and tanker spot rates, certainly for a short space of time. Now, tariffs haven't only been the only impact or noise that we've heard come out of the US. We've also had the US TR 301, which will potentially have an impact on Chinese-built, Chinese-owned or Chinese-operating vessels calling in at the US. And this is in addition to the Ships for Americas Act, which, although the bill has been introduced, has not come to law, but we expect to see that sort of discussions in and around that ramp up over the course of the second half of this year. I guess the final thing from a macro perspective has been the IMO's MEPC 83, which met earlier in the year, and the introduction of the midterm greenhouse gas reduction measures, with that likely to be signed off in the second half of this year and come in and implemented in 2028. So the backdrop to the shipping markets has certainly been one of change, almost on a weekly and if not daily basis. More generally, earnings have softened, I would say, for a lot of sectors of shipping. LNG earnings did reach an all-time low in Q1, especially for the older sort of steam turbine assets. Containers continue to outperform all other sectors, and that's also helped with sectors like MPPs, which have been able to sort of ride a little bit on the coattails of the strength of the container ship market. And I think regardless of sort of general direction and momentum, most spot sector earnings have remained quite volatile, being buffeted around by all of the events that I've sort of mentioned in this sort of opening statement. So, in all, a very eventful start to 2025 with a lot of these themes we expect to continue running over the second half of the year and into 2026.
Thank you, Adam. There's a lot of different things, I think, to take into account there. In some ways, it sort of feels like the only certainty we have is uncertainty.